Hello there. Welcome to my class. My name is Marcio de Paula, and I will be your instructor for today's lesson. Today we will be talking about QuickBooks Desktop 2020 Chapter 10. Job costing, creating estimates, and time tracking. QuickBooks lets you create estimates for your jobs, or for your customers if you don't have jobs assigned to them. Once you're awarded a job based on an estimate, QuickBooks makes it easy to convert the estimate to an invoice, so you don't have to re-enter the information. Job costing is an essential aspect for many businesses. In this chapter, you will use jobs in QuickBooks to track profitability by those jobs. You will also use progress invoicing and deal with customer deposits. You will explore the time tracking feature, which allows you to track time spent by employees on each job, resulting in more accurate payroll expenses for job costing. Finally, you'll look at a QuickBooks app that aids you in time tracking and employee scheduling, TSheets. By the end of this chapter, you will be able to create an estimate for a job or customer and convert it to a progress invoice. Apply the time tracking feature and create a paycheck based on track time. Enter customer deposits on account. Assign finance charges to overdue accounts. Run appropriate job-related reports for estimates and time tracking. Now, let's get started. We'll continue to work with the QuickBooks sample company file used for payroll in the previous chapter, Rock Castle Construction, as this will enable you to use the time tracking features to run payroll. Job costing is used a lot in the construction industry, and you'll begin by creating an estimate for a job you're bidding on. When the job is awarded, you'll convert the estimate to an invoice and bill the customer as portions of the job are completed using QuickBooks Progress Invoicing feature. You will receive a payment and handle customer deposits for unearned income. In addition, you'll use time tracking to monitor employee time on a job and create a paycheck using that time data. You will assess finance charges for customers too. You'll then run job reports for analyzing this and other jobs, estimates, and time tracking data for the company. Finally, you will explore the possibility of using TSheets to track employee time more precisely. To keep track of the income and expenses involved in this, and all the jobs Rock Castle Construction does, individual jobs are created for each customer. When applied via sales and purchase forms, job costing provides a method for determining each job's profitability and will help plan for the future. Job information is stored with the customer data in the Customers and Jobs list, a customer center component. If you have multiple projects for an individual customer, you can create separate jobs for that customer. If you complete just one job for a customer, you can track that information on the Job Info tab in the customer's record. As you create your estimates and invoices or incur any expenses for that job, you enter them for the job and not the customer directly. When customers have a job associated with them, you must choose a job on a form, not just the customer. The time tracking feature allows a company to track employee time and create paychecks and invoices based on the data collected. You can also charge employees' time to jobs. Job profitability. For companies that deal with jobs, especially businesses such as construction companies, it's crucial to determine the profitability of each job. To conduct job costing in QuickBooks, you need to take 3 basic steps. 1. Set up your data in the Customers and Jobs list. 2. Enter all job revenues and expenses. 3. Use QuickBooks reports to analyze job data. The first 2 steps are covered if you set up your customers and jobs correctly, and then enter them properly on sales and purchase forms. We'll look at the QuickBooks job costing reports later in this chapter. QuickBooks creates a non-posting account when you create an estimate, which allows you to track outstanding estimates, just as it does for purchase and sales orders. This account is displayed at the bottom of your chart of accounts. The non-posting account is created because estimates, like purchase orders, don't affect anything behind the scenes and, therefore, don't affect actual QuickBooks accounts. You can create estimates for customers or, if using jobs, for each job you do for a customer. You can also create multiple estimates for a customer or a job. If a customer doesn't have jobs created for it, you will see a Job Info tab in the Edit Customer window. However, if even one job has been created for a customer, that job info tab will not be available, and you will work with the individual jobs created for the customer. Estimates must be turned on via the Company tab of the Preferences window. Remember that expenses need to be matched with revenues. A sink bought for a bathroom remodel should be a job cost for that remodel. This principle allows for a better evaluation of profitability and performance. A change order occurs after an estimate has been entered. If a customer wants a change to an estimate, and you're using the contractor or accountant's version of QuickBooks Desktop, when you make that change, you will be asked if you want to add it as a change order to the estimate. Changes are listed under the original estimate. If you're using a different version of QuickBooks, you can still make changes to estimates, but they won't be called out as change orders. The change order feature details the amount of each change, precisely what changed, and the net change to the estimated amount. It also documents the change order for you in the description field of the estimate window. Progress invoicing. If you have a job that will span weeks or months, progress invoicing allows you to submit invoices based on parts of the work completed, stages or phases, as you go through the job. You start by creating an estimate for the entire job, and then create an invoice based on it, choosing one of these three options. Create an invoice for the entire estimate, 100%. Create an invoice for a percentage of the entire estimate. Create an invoice for selected items or different percentages for each item. You can create an invoice by opening the existing estimate or using the Create Invoices window and selecting the customer. Use the Create Progress Invoice based on Estimate window to choose what to include on a progress invoice. After you've selected one of the three options and chosen how much to include on the invoice, QuickBooks will display the Progress Invoice template. There will be several new columns on the Progress Invoice template, depending on the option selected, such as Estimate Amount, Prior Amount, and Total Percent. Every time you create a subsequent invoice for that customer or customer job, it will reflect the prior amounts and/or percentages. It's an easy way to bill your customer as you work through the job and for your customer to see what's already been done. Unearned income. There will be some cases in which you require a deposit on a job or a customer prepayment. Funds received as a deposit or sold as a gift certificate are considered unearned income because no work has been performed and no product has been sold. You may also hear this called unearned revenue or deferred revenue. It would be best if you didn't credit unearned income to an income account. The proper way to deal with it is to hold it in a liability account such as customer deposits or unearned revenues. After you deliver the goods or perform the service, you decrease the liability account and credit, or increase, the appropriate income account. Customer deposits and gift certificates are tracked the same way in QuickBooks, with both requiring you to go through the 3 steps of setting up, collecting, and recording. We will deal specifically with customer deposits, but you can apply the same principles if you need to account for gift certificates. Accounting for customer deposits is a 3-step process. 1. Set up to track customer deposits. To begin, you set up an other current liability account and 2 items, other charge and payment type. The other current liability account is necessary because, by accepting a customer deposit or a payment for a gift certificate, you're essentially accepting both as a liability. The deposit will eventually be turned into a payment and the gift certificate redeemed for goods or services. By setting up a liability account, you can show that you're holding the funds in a separate account until the income becomes earned. The 2 new items are necessary for creating an invoice. 2. Receive a customer deposit. Next, you use an invoice to record receipt of the deposit, selecting the new items and directing the funds to a liability account. You are liable for doing something in return for the funds received. You don't record the income until the service is performed, the product delivered, or the gift certificate redeemed. This won't affect an income account or accounts receivable because the balance owing on the invoice will be 0. 3. Turn a deposit into a payment. After you've delivered on your promise by trading goods or services for the deposit or gift certificate, you use an invoice to record the income. The invoice increases an income account and then reduces the liability account when the income becomes earned and you're no longer liable to perform or deliver. Passing on expenses to customers. When you enter a bill or make a purchase using cash or a credit card, you may be acquiring equipment or supplies whose costs you want to pass on to a customer. QuickBooks allows you to easily indicate which expenses are billed to a customer by providing a billable column in the Enter Bills window. When you make an item billable to a specific customer, the next time you invoice that customer, you will be asked if you'd like to add the outstanding billable time and costs to the invoice. The expense or cost of goods sold account you debit when you make the purchase essentially functions as a holding account, as you will credit it when you invoice the customer for the expense. Markups. If you wish to increase the amount charged for a service or item, you can enter the amounts individually, set a default markup percentage, or use the price level feature to apply it. You can also apply a markup to billable time and costs. Typically, you don't show the markup amount on sales forms, though you can customize an estimate template to show it when printed for customers as well. Assessing finance charges and producing statements. If you're invoicing customers, you'll inevitably find that not all your customers pay their invoices on time. You may wish to assess finance charges. In some states, the terms late fee or service charge may be used. Finance charge, lending, laws vary. Research your jurisdiction to know whether you can assess finance charges on overdue balances. Do not use the specifics in this book. Please find out the laws that apply to your location and then apply them appropriately. You can set several finance charge preferences in the Finance Charge category on the Company Preferences tab. The finance charge account is an other income account, as the income received is not the result of your normal business practices, unless you're a financial institution. If assessing a finance charge, be sure to note the payment terms on the invoice clearly, including the wording as accounts not paid within terms are subject to a % monthly finance charge and a $1 late fee. Some companies give to their clients a grace period of 5 days. This is an example only. Do your research for your own company. Assessing finance charges and producing statements. If you're invoicing customers, you'll inevitably find that not all your customers pay their invoices on time. You may wish to assess finance charges. In some states, the terms late fee or service charge may be used. Finance charge, lending, laws vary. Research your jurisdiction to know whether you can assess finance charges on overdue balances. Do not use the specifics in this book. Please find out the laws that apply to your location and then apply them appropriately. You can set several finance charge preferences in the Finance Charge category on the Company Preferences tab. The finance charge account is an other income account, as the income received is not the result of your normal business practices, unless you're a financial institution. If assessing a finance charge, be sure to note the payment terms on the invoice clearly, including the wording as accounts not paid within terms are subject to a % monthly finance charge and a $1 late fee. Some companies give to their clients a grace period of 5 days. This is an example only. Do your research for your own company. Remove a finance charge. After applying finance charges, you may decide not to charge a specific customer a finance fee, especially if it's a good customer or one from whom you might expect to get a volume of work. You can use the Statement Charges window to remove a finance charge. Even if you remove it, you can still charge a finance fee to this customer in the future. Creating statements for customers. There are many instances when you may wish to send your customer a statement rather than an invoice. You may have one customer for which you do multiple jobs within a billing period, and you wish to bill them with an itemized statement. Another example would be to create a statement to bill a customer for a finance charge. You can produce statements for an individual customer or in a batch for multiple customers. The more common way to alert customers to the finance charges they owe is to produce a statement that reflects the finance charge, outstanding invoices, and aging information. You can send an invoice reflecting assessed finance charges to your customers. Just check the To Be Printed checkbox in the Preferences window. Statements can be printed for one or more customers, and there are a variety of ways you can select the customers to whom you will produce and send a statement. Some options will dictate how your statements will print. Emailing forms and reports. You can send more than just invoices from QuickBooks. In the Preferences window, you can set the default message for 12 types of forms and reports that you can easily send. You can also set which email service to use on the My Preferences tab of the Send Forms category. You will set the service with which you send emails on the My Preferences tab of the Send Forms category, while the company's email templates are placed on the Company Preferences tab. When editing the invoice email template, you can insert the customer's purchase order number in the email subject line. Note the other fields that draw from your QuickBooks data that you can include in an email template as well. In QuickBooks 2020, you can easily include customer PO numbers in the subject line of your email. Combining forms to send. You may have multiple forms to send to a customer. Rather than sending each individually, QuickBooks allows you to combine all forms for a customer onto one email in the Send Forms window. The Send Forms window allows you to choose the emails to send, combine the forms for a single recipient into one email message, and edit the email text. Customer payment reminders. Many small businesses fail because they can't keep track of their receivables. QuickBooks now offers a powerful payment reminders feature that allows you to create mailing lists of customers, send payment reminders, and schedule reminders to be sent out in the future. QuickBooks 2020 makes it easy to send payment reminders to customers who have invoices due. You can view these reminders using the See History feature in the Create Invoices window. Tracking time and mileage. The time tracking feature allows you to create weekly timesheets to break down the hours by customer and job or single record activities for a customer and job. In addition to these payroll benefits, time tracking also allows you to invoice customers for a number of hours worked, automatically fill in the hours worked on paychecks, track time for subcontractors by automatically filling in time data on bills and checks, track payroll costs by job, class, or type of work performed, track billable versus non-billable time. After you've used time data, you can run reports such as the time by job summary to view how many hours were tracked for each job. Time tracking also allows you to allocate the appropriate payroll costs to a job, making your job costing reports more accurate and meaningful. Methods of entering time. There are two methods by which you can enter time data in QuickBooks. As a single activity when it occurs, you can type the amount of time in the single activity window or use the built-in timer to record the exact amount of time. On a weekly timesheet, use the weekly timesheet to enter time data for multiple customer and jobs, service items, and payroll items for a single employee. You can use this information to create paychecks. You can use the billable column on a timesheet to determine whether the time is billable. If a check mark is in this field, the customer can be billed for the time. If an invoice icon appears, the time has already been invoiced. Fields available in both time data entry windows. Whether you enter time as single activities or on a weekly timesheet, each window provides these same fields. Customer job. This information allows you to bill a customer for the time and to keep track of information required for accurate job costing. Service item. This information will enable you to track services performed. Payroll item. This information will allow you to choose the appropriate payroll item for your time data. Billable. Choose this field to make the information available to bill the customer for the time. Notes. This information displays in the description field on reports and invoices. Some businesses may have employees or vendors who work the same hours for a job. For instance, if you own a construction company with crews who work together on the same jobs each day, these businesses can create one timesheet for multiple payroll names, employees for whom you use time data to create paychecks, or multiple non-payroll names, such as subcontractors. When working with batch timesheets, all workers for whom you're creating a timesheet must have in common the job, the number of hours worked per day, payroll items, and service items. When setting up a weekly timesheet, the name field at the top of the window provides options to choose multiple payrolls, employees, or multiple non-payroll names, such as subcontractors, to create billable time in a batch. Tracking mileage. The QuickBooks mileage tracking feature is used to track billable mileage for your business vehicle. Its purpose is not to reimburse employees. The mileage data can be billed to customers as an expense or for tax reporting purposes. QuickBooks will calculate the mileage expense based on the approved rate on a specific day. You will need to ensure you have the latest IRS mileage reimbursement rates entered. To track mileage for a vehicle, you must first enter that vehicle into the vehicle list. To view the mileage information you've been tracking, QuickBooks provides mileage reports. You can choose to pass on the mileage expense to your customers and create reports to view the amount that has been billed. Using time tracking hours for paychecks and invoices. You can use time data for employees to create their paychecks and for vendors to create their bills by entering the time using the single or weekly timesheets. Using time data for either employees or vendors also allows you to invoice your customers for any billable time. Allocating time spent by employees or vendors on a job should help in producing more accurate job cost reports. By marking the time as billable on the timesheets, the hours will automatically be imported when creating the paychecks or bills. When you create an invoice, you can choose to pass billable time to customers, just as you can with expenses. If you're tracking that, you will be prompted that there is billable time, including billable mileage. Regardless of which type of cost you're passing on to the customer, the process is almost the same, and you can even choose to specify a markup amount for the hours. Invoice using billable time. Just as you passed on the barbecue cost to Mike Ballack for his deck job, you can also give him the actual time worked on the job. The process for passing on billable time uses the same Choose Billable Time and Costs window used to pass on expenses. With the time tracking preference turned on, a fourth tab appears in the Choose Billable Time and Costs window. Use it to choose the time on which to invoice a customer. Tracking reports, jobs, time and mileage. QuickBooks job costing, estimating, and time tracking features include many preset reports that you can run to learn more about your business. Not all the jobs, time and mileage reports are in all versions of QuickBooks. For instance, some reports are only available if you use a premier version of QuickBooks specialized for your type of company. Like other reports, these standard reports can be customized. QuickBooks provides you with many reports to track jobs, time and mileage, which are broken down into 4 categories. The Jobs Reports Column Collapsing Feature. The column collapsing feature available in certain reports, such as profit and loss by job, allows you to easily show or hide the columns displaying jobs or classes, so you can better view the totals for each job or class displayed. This means that in job reports, the details for specific jobs can collapse down to just display customer totals. You can collapse columns horizontally with a click to better view totals. The jobs for Christy Abercrombie are collapsed, evidenced by the plus sign displayed to the left of her column. Conversely, the jobs for Robert Allard are not collapsed, so a minus sign displays to the left of the column indicating the data for his remodel job. The plus and minus buttons toggle between showing and hiding the job columns. You may find that the time tracking standard in QuickBooks Desktop doesn't meet your company's needs. No worries. Intuit now owns the TSheets app that works seamlessly with QuickBooks. There is an additional fee to use TSheets, but you may find that the cost is worth the benefits. Let's look at some of them. Gone are the days of rounding up on timesheets. With TSheets, employees can clock in and out from their mobile devices and receive reminders regarding breaks, overtime, and clock in/out. They can choose to clock in for specific jobs as well, which makes it easier for you to invoice clients for the time spent on their jobs. Here's what the TSheets My Time card feature looks like on an iPhone when an employee is preparing to clock in, left, has clocked in and added a note about what the time is for, middle, and has clocked out, right. Note the time tracking precision. This employee could have easily rounded up to a half hour or even an hour. Payroll specialists may be scared over the fact that payroll processing will become more efficient, but it can free them up to do less rote work and more innovative projects. With the days of handwritten time cards in the past, electronic timesheet approvals will leave you with more time available for activities that can boost both the bottom line and morale. QuickBooks integration. With just one click, you can take all the data in TSheets and export it to QuickBooks. You can use the same customers, jobs, classes, items, etc. you use in QuickBooks, making it very easy to sync the two. Scheduling and GPS. This app also provides scheduling capabilities, so you can see who's working where and on what job easily. You can also track employee time on the job by GPS, providing another benefit to your clients and employees. This helps solve the old debate, he said and she said, which may pop up from time to time, regarding whether an employee was at a particular job site. TSheets app is just one of many apps available to QuickBooks users. To learn about all the apps that work with QuickBooks, visit apps.com. That's all for today. Your next step is to review this chapter and get the exercises started. Thank you for participating in today's lesson. I will see you in our next session. And remember, if you don't know, askmarcio.com.